Nothing feels better than finding out you can write something off. That is the moment every entrepreneur realizes, wait, the tax code was actually written for me. But here's the problem. Most people don't know what they can legally write off, or they're leaving money on the table because they didn't track it the right way. So today, we're going to break down what counts as a business deduction, how to know if it's legit, the most commonly misused write-offs, and how to track them so the IRS stays happy and you stay wealthy. Let's talk tax savings. All right, here we go. So, first thing we're going to talk about is understanding what a write-off is. So, before we start listing deductions, let's be clear on something. A write-off doesn't mean something is free. It just means it's tax deductible. It reduces your taxable income, which lowers your tax bill. So, for example, you make $100K in revenue and you have $20K in business deductions. You're only going to be taxed on that $80K. So when people say the rich don't pay taxes, what they really mean is the rich just understand how to use deductions strategically. Like, I know we were all mad about the fact that Donald Trump don't pay taxes, but that's because he understands the tax code. He understands how to play the game, and you should learn how to play the game as well. The IRS uses one simple rule to define what qualifies, and the phrase is ordinary and necessary. Now, part of the tax code, I believe it's section 192. I don't know the exact section of it. I have to go over it again. But ordinary means it's common for your business type. And necessary means it helps you to operate or grow. Now, ordinary is simply means, what's ordinary for your business, right? What's ordinary? Ordinary is your website. You need a website. That's ordinary. Tax software, because I'm in the accounting space. So tax software, that's ordinary for me. Now, what's necessary? Well, necessary is my social media platforms. Those are necessary because they help market it. Any travel expenses if I'm going to attend like a seminar or if I'm going to attend an event that's related to taxes or accounting, that's necessary because I'm gaining education from it. So remember, ordinary is just something that you need for your type of business, and then necessary is just things that help you grow. And that's it. That's the rule. If it meets both, you can deduct it. All right, so let's get into some core business write-offs. So here are some different, options you have as far as like deductions go. So we can look at office expenses. So things like desk, chairs, printers, software subscriptions, like Zoom or Canva or Google Workspace. These are things you can write off because, you need them for your business. Ordinary and necessary. Advertising and marketing. You have paid ads, flyers, photo shoots, website domain, business cards, AI tools you use for your social media content creation. Again, these are all necessary to helping you market your business. Travel. You have flights, hotels, rental cars, mileage to business events, or even client meetings. Again, more write offs. Meals. This one here, you can only do 50%. What I learned is, you can only write off 50% of meals with clients or partners. Just 50%. And you have to put on the receipt what you talked about. Education. Again, kind of going back to what I was saying earlier, with like flying to like events and stuff like that. Courses, books, certifications that directly help improve your business. Professional services. Me as a tax preparer, or anybody you pay for tax preparation, anybody you pay for, accounting, lawyer, virtual assistants, people to design your website. These are tax deductible. Then you have utilities and internet. If it's used for your business, especially if you're a home-based business, a portion of your internet can be written off. And then if you have, things like insurance, business liability insurance, health insurance for all, my business owners and entrepreneurs out there. And obviously, like I think I kind of briefly mentioned it earlier, but like subscriptions. So, don't forget, like you can write off subscriptions. So your CRMs, QuickBooks, you can write that off. Use things like Acuity, all of that. Like you can write all of those subscriptions off because they are necessary to running your business. All right, section 3. Next thing we're going to get into is write-offs most people miss. So a top one a lot of people might miss might be the home office deduction. And that's simply just when you can deduct a percentage of your rent or your mortgage if you use a dedicated space in your house specifically, regularly, and exclusively for work only. And it cannot be your bedroom. Your bedroom will not count. It needs to be a section in your house that's literally meant just for work purposes only. The phone bill. The phone bill is definitely one that's also missed. I know I missed this out on like the first, probably 2 years. Like you can deduct a portion of business calls. Your phone bill, whatever you pay for your phone, you can deduct part of that. If you have clothing with like your logo on it, this one I learned about this one, I think 2023, and I was like, I definitely got to start taking advantage of this. So, only if it's branded with your logo can you write it off. If your logo, if it's a required uniform, you can write that off as clothing. Mind you guys, there are a lot of deductions that can be taken. You just have to understand ordinary and necessary, and if it's if it falls under that category of ordinary and necessary, you can deduct it. Startup costs. So starting your business, up to $5,000 in the first year. You launch your business, you can write that off. Any interest or bank fees from, business credit cards or Stripe or PayPal, if you use those to take payments. Again, kind of softwares and apps. Again, anything that helps run your business. And then if you do like coaching or have done coaching or consulting, again, like that also helps as well. Business growth expenses absolutely count. So if you want to spend money to make money, it probably qualifies. Sorry, I should say that again. If you spend money to make money, it more likely will probably qualify as a deduction. Now, how to write off like a pro. So the main thing to keep in mind here when it comes to deductions is you cannot deduct what you cannot prove. So you need to track everything. And I think I've gone over this before multiple times, and I'm pretty sure I mentioned this in the last episode as well. So, first thing is make sure you separate your accounts. Do not ever mix business and personal accounts together. Keep them separate. Have a dedicated business checking account and a card, and strictly only swipe that card for business expenses or anything related to your business. You need to use a bookkeeping software. Again, most people have QuickBooks or some type of app that helps, scan receipts and then categorize expenses automatically. You need something to track your receipts. Kind of going to the next one, save those receipts. Again, digitally is fine. Kind of like what I just mentioned, snap a photo and upload it. You can do that as well. There's plenty of apps out there for that. And then you want to review it monthly. Like, don't wait until tax season. Like, you want to reconcile each month. So if you're going to do your own bookkeeping, make sure you're obviously categorizing your transactions and then reconciling your accounts every month. A clean record equals a confident filing. And if you ever get audited, then you have the evidence to hand over instead of trying to scramble it. All right, so the next thing we're going to go over is some red flags and gray areas. So let's talk about what not to do. So the first thing is, do not write off personal vacations and call them business trips. If business wasn't the primary purpose, don't play yourself and risk it. What I learned was travel on weekdays and fly back on weekdays. Conduct business. If you're going to travel for like Thursday to Friday, make sure that, or maybe like Thursday to like Monday, make sure that business is conducted on those weekdays. I don't know if I have to check again on whether or not weekends count, but I'm positive that weekdays for sure. If you conduct business on your trips on weekdays, then for sure it can be written off. But yeah, don't take personal vacations and call them business trips. Don't do that. Don't swipe your business card for personal trips. Don't do that. Not necessary. Don't play yourself. The next thing is, don't write off gifts over $25 per person per year. That's the IRS's limit. You cannot do that. No gifts over $25 per person per year. Don't assume cash payments are invisible. Like IRS is smarter than TikTok. Although, you can. I'm not gonna tell you what you do with your cash, but I'm just saying, just don't get busted. Don't get busted doing anything crazy. IRS knows how to. The IRS will find their way to get onto you. And then the last one, kind of just don't exaggerate on deductions. If you made $40K, but your meals are $20K, that's kind of suspicious. So play the game, learn the game, but play it correctly. Again, I've mentioned this before. Don't give Uncle Sam, don't give the IRS a reason to look into you. Don't give them a reason. All right. Next section we're going to go over is your mindset shift. So, most people only think about taxes when it's time to file. But, entrepreneurs, they think about taxes when they spend. Every swipe, every purchase, every decision. Ask yourself, is this business or is this personal? The mindset shift turns taxes from a headache into a strategy. So remember that taxes are your biggest expense as a business owner, but they're also the biggest opportunity if you learn to play the game. So just to quickly kind of recap your write-off checklist. Make sure all of your accounts are separate. Review your expense categories. Track receipts weekly. Schedule a year-end deduction review with yours truly. Meet with your bookkeeper or tax pro before December 31st. Do these 5 things, and April will feel like a breeze. Shout out to Haha Davis. All right, guys. So that's today's episode. I hope you guys did take notes. I hope, definitely opened your eyes. Make sure you go to the website and get my A to Z playbook. Also, cop the checklist if you need help just kind of staying organized for a tax season. Again, let's not leave any money on the table. I've definitely come, along my journey as an entrepreneur, I definitely learned to just don't leave money on the table. We want to try to keep as much money in our pocket as we can. So, on that note, if you're ready to stop guessing and start strategizing, book a free consultation with Millennial Gems Financial Solutions. We'll help clean up your books, organize your deductions, and create a plan that keeps more of your money in your hands. Until then, remember, write it off. Don't write it off mentally. Write it off legally. I'll catch y'all on the next episode. Peace.